Hi, this is Brian Neal with Tradetobefree.com, and just want to go over some of the trades we looked at and took and didn't take today. And the big winner was Stamps.com, and we had a feeling that would be the case. This morning we did the pre-market video. We said that this one looked really good, and the only problem was that just before the open, it started popping up above this consolidation area. And I was thinking the top of that consolidation was around 172, 174 for some reason. It was actually closer to 176. So I saw this big gap developing here, and we hit the open, started to pull back a little bit. I thought, oh, geez, we're going to come back and we're going to test this 174 area. Yeah, I don't want to see the stock move out of the consolidation more than 3% or so. But in actuality, if you go back further, the top of that consolidation was up here, actually above around 174.65. So, it was well within reason. And when it pulled back right after the bell, I thought, oh, there go the Qs. The Qs are pulling back sharply. I think the SPY was pulling back sharply. So I didn't jump in. I was like, you know what? If it makes a really big move, I'll go ahead and wait for a secondary entry point. And that was a mistake because that satisfied all the conditions in the earnings eruptions course, and had the gap, had the pre-market pattern, had the guidance raise, had the great long-term trend. Sort of have it in my mind right now that we're going to have a little pullback in the overall market. And I saw the Qs diving this morning right after the open, and I thought, maybe not. But I shouldn't worry about that because the Qs would have to come back a lot for this trade to be affected that much. So yeah, so I missed that entry. That's a bummer because it went up. Oh, let's see, it went up 10% out of the ideal entry point. So satisfied all the conditions. I thought it was well above the prior consolidation when it really wasn't. And yeah, I should have that was a mistake. The secondary entry point occurs when you get a strong 5-minute candle, followed by a breaking of that 5-minute candle. So I went ahead and jumped in there, right in this area here, and then the stop is below this candle. And then what I did was I held through the break of this $200 level here, and after we broke that, I cut half of it, and then I'll stop the rest at the entry point. But pretty good trade, couple percent probably. This may continue on. This may be a giant ABC pattern. A full projection of this first move would take this to, I think, 213, 214. And the way it's acting, late this morning and into the noon hour, it's very susceptible to going back above the VWAP and then consolidating there and then making another move once it breaks above 201.55. So it may make another move this afternoon of a few percent. So, but if it pulls back and if it hits the stop loss point, then I'll just take the profits on the first half of the trade. So yeah, the other stocks we're looking at were Sedge, and this one was looking really good too. The only problem with this though is before the market opened, the price dived and hit the bottom of the support level, which is fine and can be a good thing. But the distance between here and this area right here becomes such that once it makes its move and it starts going above this resistance right here, it'll tend not to go as far, okay, because it has so much longer to go from this point where it opened, which was at 25.80, 85, up to these highs here. That's a long way for a stock to run. And given that it's diving down ahead of the open, that 5-minute candle could break and we could see it come back, test the VWAP, and then make a stronger move lower. And so kind of like what we saw with Take-Two Interactive. And that was something we talked about this morning too. And it did just that. It opened up, started moving, but then it came back, found resistance at the VWAP, and pulled back some more. Later on in the morning, it came back and it went back above the VWAP. But again, we're constrained here, with this resistance level right here. Again, the earnings, I couldn't get a clear read at whether we were really beating on the top line and bottom line. And so I took this trade off my radar completely. It didn't hit the entry point. It didn't even come close in the earnings eruptions trade. The only one that really did was STMP, because Sedge really didn't qualify in terms of where it was opening relative to where it was the range prior to the market open. So that's one of the rules in the course, and the course explains that in more detail. But yeah, this was a great or very good setup. Again, the Q's diving, the SPY's diving as market opens. That kind of gave me the jitters a little bit, and I thought, well, I'll wait for the first pullback. And really, the first pullback generally doesn't give you nearly as good of a entry or profit as that first entry. And right now, if the secondary moves or the second waves higher in the morning off these big earnings beats aren't as big as they have been a few weeks ago. So, and that's part of being in a time where the market's consolidating. You're in early August, and the Nasdaq and the S&P 500 are pulling back, and that's pretty typical for early August. So that secondary move is not as big as at first very often. So, this may go back and forth up below and above the VWAP here. I think what'll probably happen is it'll probably find support after it gets above the VWAP again. It'll find support up there and then come back, touch it, and then break this high right here to 155, and then from there it may make a nice move. But I'll just stop the rest of my shares that I got in on around here and stop that at the entry point, take the profit on the secondary move, and kick myself for not taking the initial entry when all the factors were there for the stock to make a big move. And the gap was strong enough to where if it went up 2, 3, 4% prior to the market open, that's okay, because it has such a big gap here, and this ABC up pattern would take it at least up a few percent. So, and with a catalyst, that's very likely to happen. So that's a mistake on my end, not jumping in at the entry point, which occurred right after the open. But I caught the secondary move, and we'll see if we get some more tomorrow. We have Applied Optics reporting after hours, and they tend to beat their pre-announced earnings even. So they may have some kind of announcement, who knows, and that might cause us to gap up a lot higher after hours and might set up a day trade for tomorrow soon. Oh, another stock I wanted to talk about too was Court. And on Tuesday night we said that after a big earnings beat, if it went above 1330, be a great follow-on entry point for the stock. And we jumped in around 1330, and today it continues to go higher. This was a very good earnings report, and they have accelerating growth, not only in earnings, but also in cash flow and sales. Very strong sales growth too. And they've got some other drugs in the pipeline here that they're working on, and some candidates that look pretty good. So this one is finding support now at the top of the prior consolidation yesterday, or the high yesterday. It's finding support around there. So this could trend higher for a while. It's got the fundamentals to make a big move out of this breakout. So right now it's up 6-7% from our entry point yesterday or so, and more from our initial entry point. And hopefully it'll continue to trend higher, but that looks really, really good. Still several hundred other companies that will report after the bell tonight and also before the bell tomorrow. So we'll have some more gappers and some nice earnings beats for tomorrow, and hopefully we can catch one of those tomorrow. All right, thanks guys. Talk to you again.